Welcome to TradeTheNBI.com. This is John. This report is for the 11th. Well, it was a decent day the other day as far as bulls go. We still maintain that read above NBI yellow here, with the magenta still leading, and that was enough to keep things going, which is kind of what we expected. While it was a big, strong day, the reality is we're just trading sideways, and that's really reflected here on the DOC, where DOC red just kind of slowly ebbing forward, meaning they're just like dipping their toe in the water. Even midterm buyers, not so much. Shorts have definitely helped the situation. You can see the rise in NBI white in shorts, and also the cyan. So that was enough to give a little bit of fuel to it. They weren't able to overtake or cross over in any way, shape, or form the DOC from a steel standpoint yet. And that's been enough. But it's at a precarious spot. It could flip anyway, in which case you're likely to just see more of this back and forth type of action. That gold rising has been really the only thing that saved things from breaking down even further. And part of this is just confusion as to where things are going. You can see the blockage that Trump is facing at every corner with regard to any movement where judges are jumping in to try and stop the accountability and all the other different elements. And that's part of what we talked about, how slow things are going to go from there. We started to get some revised numbers from the different agencies, and from an unemployment standpoint, things like that, not so rosy, at least for native born. We can see that almost all the jobs created were non-native American, and that was an interesting one because it says that the average person is struggling within this broader scope of the economy. Though wages have gone up, but that's just a matter of partially covering for what inflation's done. It's not even close to meeting it. And I think the market is starting to realize that companies are going to be stressed, I think would be probably the best term for it. When we look at the NASDAQ here, you can see the same situation, continuing following shakeout. It's hard to see the gold rising there, but it's just a slight improvement from it. That's just a continuation of this in-between period is really what I refer to it as. We're just caught in this malaise. Same thing you see in treasuries. Nobody really knows what to do, but the reality is inflation is still there. None of that's changed. When we look at it from an oil standpoint, this is your problematic area. As long as this continues to maintain itself, you still don't have the supply. We knew that this was going to take some time, so even the rhetoric and stuff isn't going to be enough to keep that at bay, and that is problematic for at least Euro countries as well as just the economy in general, because it's a huge suck from the available capital to do other things. And that's really what we have to look at it from that standpoint. It's like, well, if you're spending for energy, you're not investing in your business growth and those kinds of things. You're just trying to tread water. And so you can see the effect of the euro. Well, the euro has its other issues, but oil rising definitely is not a bonus for them. It only adds to the consternation. And now you see the trade war has begun, the tariffs on aluminum and that, and those are going to spread. How long they will last, I think that's the misnomer, and I think this is where the market expects, and the Fed definitely thinks that these are all inflationary items. But at the end of the day, it's just about redirecting who the producer of these items are and where that takes place at. So, when you're looking at it from a dollar standpoint in the devalued state that it is from the inflation that we've experienced, typically things are more expensive, but that's just going to be in line with, catching up to what you had 4 years of, hyperinflation that really wasn't codified in the numbers. So still a lot more work to go before that's even caught up, which it's unfortunate because it's going to be continued drain. And this is why you see this gold. That's an explosion, no question about it. And, it's outpacing everything at this particular stage because it's finally a recognition that even within crypto, which had already made the move, gold is now catching up to it. And we saw that there was latency, but we expected this to happen. So this is not, in my mind, a shock in any way, shape, or form. That it's still under 3K is probably even a deal. Simply because you have to take into account what we've seen from a value destruction of the dollar, even though it's somewhat stabilized at this particular stage. You don't have a control on inflation at all at this particular stage, and I think you're months away from seeing that happen. Now, that doesn't mean the market isn't going to price in changes in that before they start to happen, but that's where you'll start to see it. Gold will suffer more, and you'll potentially see some benefit to stocks, but I don't know that it'll be all that great in the near term. And that's just because, like we talked about, if you're going to cut excess waste in the budget and everything else, that's fine. It just depends on if you're able to redeploy it in productive means. And most of what's been spent on the budget at these particulars is not productive means, because when you look at defense spending and all these other things, it's not really a boon to economies, boon to certain companies and that, but it doesn't really help regular individuals. We haven't seen any legislation for tax breaks for individuals and things like that that would actually provide the consumer, which is what drives most of the economy, some kind of relief. So that just hasn't happened. Turning to Bitcoin and that, just a slight turnaround here. So that's positive from that standpoint. But again, this is that indication that if you see the cryptos rising, it's just a lack of security in what they think the base currency can do. And I think that's literally all what's driven most of these, is just this doubt that the U.S. can handle its debt and get things under control. And it doesn't look like the Fed is going to want to add more liquidity to the situation. So does that bake in a recession? Yeah, for the most part. Which I think was always what their intention to do, was if Trump got there, would be to drive things lower. And as you start to see, you can see the trying to manage away from the bureaucracy is difficult, because even as these people get fired, they sue immediately. And they have favorable judges that are blocking things, and that's just stalls it. And that's the whole plan, is just to try and stall as long as they can for a year and a half till the midterms, see if they can take control and probably try to impeach him or something again. ETH, a little bit of a break here from its continued softness, and it's not going to change. This is still ugly shakeout. There's no real improvement there. Turning to the 50K, you can see that most of the activity took place at that early morning. We got to the 50%. We had Magenta leading, crossed over the 50, and it peaked out. There was just too much, but it wasn't any short interest really that could drive things until we're seeing here right at the end now in this pre-market area. We've got a bit of the dip, and you can see the orange continuing its move, but there's no turnaround here from a DOC standpoint and a shakeout. Definitely ugly and below the red line, so that's not exactly terrific. And when you approach the 50%, if you get the crossover of MBI white, well, then potentially the zero now, it's possible the zero could start to, Fibonacci line could start to rise, but it's going to put pressure on things when we reach that 50% if there's not an active turnaround in support. From an intraday standpoint, you can see it was just back and forth between call buyers and put players for the most part. They basically just destroying gamma and that early on in the week here, and you can see in the European session they're not happy with how things are going from that standpoint. Of course, they're going to retaliate and stuff, and it's a wrong play for them as opposed to negotiating and just squaring things away from a proper standpoint. But there's no arguing the reality of it when they charge VAT tax and all the other fees for imports of any product coming from America. That's a 30% tax on roughly everything that goes into the European Union, and the U.S. charges a couple of percent. So it's just not competitive or at least fair even, and that's all, it's ever been about for America, is just level playing field. And for too long, it hasn't been that way. And so while this will even out the scales and everything, and people will call it inflationary and stuff, that's not necessarily how that works. And like I said, smart businesses started their move towards America earlier. Most of them didn't, and they're going to be behind the curve. And again, that latency is going to mean that things aren't going to really catch on till later part of the year or early part of next year. And that's just the reality of it. So just be aware of that and continue to follow it along. As always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.